Hello everyone, welcome to JAIIB CIB Prep. I hope you all are doing great. In today's video, we're going to discuss about unit number 9, operational aspects of NRI business. And in this particular unit, we'll learn about the different types of accounts which are permitted in India for NRIs and PIOs, be it NRE account, FCNR account, NRO account, SNRR account, or what are the different investments NRIs and PIOs can make in India, and what is prohibited for them. What is repatriation, non-repatriation? We'll learn all about it in today's session, and we conclude the class by doing some practice questions. So let's begin our session. Foreign Exchange Management Act empowers the Reserve Bank of India to make rules about how people living in India and those living outside India can maintain bank accounts and do foreign exchange transactions. Since many Indians live abroad and still have strong ties with India, they send money, invest, or keep accounts here. Now, Foreign Exchange Management Act allows special facilities to them. Who is an NRI, who is a PIO? So, NRI is an Indian citizen who lives abroad for work or business. Now, this particular person resides in a foreign country but is a citizen of India. And PIO, person of Indian origin, he resides in foreign land. He is a citizen of a foreign country, but he has ancestral ties with India. His father or grandfather or great grandfather belongs to India, but they are citizen of foreign country. OCI, overseas citizen of India, to someone with lifelong visa and special rights is an OCI, and PIO is includes this term OCI. Permitted bank accounts in India for NRIs and PIOs. To make banking easy for NRIs and PIOs and to manage India's foreign exchange properly, RBI allows three special types of accounts: NRE account, FCNR account, and NRO account. Let's discuss about NRE account and we'll go chronological order. Then we'll discuss SNRR account and what are the permitted investments. So let's discuss about NRE account. What is an NRE account? An NRE account is a bank account in India that non-resident Indians, NRIs or PIOs can open to keep their foreign income in Indian rupees. Think of it as a bridge between foreign income and Indian banking. Although money is sent in foreign currency like US dollar, dirham, pound, it is converted into Indian rupees and maintained in Indian rupees. Now, who can open it? It can be opened by NRIs or PIOs. It is maintained with authorized banks, the banks which are authorized by the RBI, and it includes scheduled banks and some cooperative banks as well. What are the types of NRE accounts? NRE account can be a savings account, a current account, a fixed deposit, or a recurring deposit. Joint holding on operations. So, joint account is permitted. A joint account can be opened by an NRI with another NRI or PIO. Number one. Number two, it can be opened with a resident relative, but the mode of operation will be former or survivor basis. This means the resident can operate it only after NRI passes or as a power of attorney holder. Now, what can a resident who is a power of attorney holder can do? This must come to your mind. So, let's say an NRI gives power of attorney to their brother in India. Now, his brother can pay bills in India from the account. He can send money to the NRI abroad, or he can invest in India, but following the rules and guidelines. And what he cannot do? He cannot open a new NRE account. The person resident in India with a power of attorney who cannot open a new NRE account. He cannot send money to someone else abroad. Neither he can give to other residents using this account or transfer money to another NRE account. What are the permissible credits and debits? So, money sent from abroad, inward foreign remittance, is permitted to be credited in this NRE account. Foreign currency which is carried by the NRI or the PIO is permitted to be credited provided the NRA declares it properly. Interest earned on the account is permissible to be credited. Any income which is earned in India like rent, dividend, salary after taxes, they are permitted to be credited in the account. Any type of transfer from another NRE or FCNR account is permitted. So this is also a permissible debit. And a refund from builder in India if the originally uh, the original mode of payment is from this NRE account or through a foreign remittance. Let me explain you this with an example. So for example, a person, he's an NRI. He wants to purchase a flat, and for this he paid a certain amount. Now what happens is his flat booking got cancelled. Since he has paid money, he is eligible for a refund. Now this refund can come directly to this NRE account, provided this NRE account is the original mode of payment or he has paid via foreign remittances. So what are the permitted debits? Uh, Local disbursement or the NRE account can be used to pay expenses in India, to send money abroad, or to transfer to another NRE or FCNR account. Here, fixed deposits minimum tenure should be 1 year. In general, the minimum tenure of fixed deposit is 7 days, but here it should be a year. And for interest rules, we follow RBI rules. For savings account, it should be same as regular Indian accounts. For FD, it is based on the duration that and the deposit size. So, interest can vary for different tenures. For longer duration, the rate of interest is usually higher, and uh, for bulk deposit, a bank can have different rates. But uh, just like domestic banks, this account will not incentivize any bank staff or senior citizen. So there will be no extra interest for staff or senior citizen. What if the NRI wants to break his NRE account FD early? So penalties may be applicable, and bank must inform this about uh, the bank must inform the NRI or the PIO about the penalties in advance. No penalty is applicable is if account is converted into RFC, resident foreign currency account. So when a NRI comes back to India permanently, his NRE account can be converted into an RFC account. And if the account is converted into an RFC account, there will be no penalty. And if there is a change in the banking business, like business is transferred to another bank, in that scenario also there will be no penalty involved in case of premature withdrawals. And once an NRE account is converted into RFC account, we have to see two things. Number one, whether the FD has run the minimum period of 1 year. If not, the interest will be provided as per RFC savings account. And if it has run for more than a year, the original rate which is contracted, it will be applicable. What after the death of account holder? So on NRI's death, balance can be transferred to non-resident nominee, and if nominee is resident Indian, they need RBI permission to send money abroad. Loan against NRE deposit is permissible. So RBI allows bank in India to give loans using NRE FD as security. Also, branches of Indian bank abroad can give NRI loans based on these NRE deposits. Tax benefits. So no income tax will be applicable on the interest earned in NRE account. and there will be no wealth tax on the amount in NRE account. Loan against NRE deposits. So we'll classify these loans into two categories: loan in India and loans outside India. Let's first discuss loans in India. Who can take the loan? The NRI himself, who owns the account, or someone else in India, a third party, can also take a loan with NRI's permission. There is no limit on the loan amount. The bank can decide the amount based on the rules, and uh, there is no lien allowed on savings account as well. So there is no lien on NRE savings account. Only fixed deposits can be taken under the lien. What about the margins? So usual margins of the bank are applicable. Bank will apply the margin rules. And where can we use this loan? So what are the permissible uses? Only for personal needs like medical needs, education, or a person wants to do business in India, wants to invest in Indian firms, but on non-repatriable basis. So here, what do we understand by non-repatriable basis? Meaning to say the person cannot send money to abroad. On repatriable basis, when we say repatriable basis, the person can send money to abroad. Non-repatriable basis, he cannot send money to abroad. And the loan can also be used to buy a residential property for own use. So in real estate business, a person cannot invest, but the loan amount is permissible to buy residential property provided it is for own use. Where this loan must not be used, so for relending, lending to others, for farmers, for farming, plantation, agriculture activities, or for buying property for resale. You cannot do real estate business with this loan amount. Let's talk about repayment. So if the loan is taken by the NRA himself, it can be repaid using the same NRA deposits by sending money from abroad or from the NRI's NRO account. If someone else takes the loan in India, the NRI cannot get any payment even indirectly in foreign currency. Keep that in mind. This happens in order to avoid the misuse. Now let's talk about loans outside India. A bank in India can allow its foreign branches to give loans based on NRI deposits. These loans can be given to the NRI himself or to someone else for genuine or bona fide purposes. The Indian bank can also send money abroad to help repay that loan. This is it for NRE account. Let's move forward to FCNR account now. So this is a type of account which is designed specially for NRIs and PIOs to keep money in India in foreign currency. So we maintain NRE account in Indian rupees, but FCNR account is maintained in foreign currency only. It can be opened by NRIs and PIOs, and these accounts can be opened with authorized dealers or other banks which are allowed by the RBI. Now, you can deposit freely convertible foreign currencies in this account like US dollar, pound, euro, Japanese yen, or any other currency which is approved by RBI. You can only open a term deposit. Recurring deposits are not allowed for FCNR account, and the deposit period should be a minimum of 1 year and maximum of 5 years. It is divided into 5 fixed blocks. 1 year to less than 2 years, this is the first block. 2 years to 3 years, 3 years to less than 4 years, 4 years to less than 5 years, and then exactly 5 years. So these are the 5 fixed blocks in which FCNR account is maintained. With respect to interest rate, both fixed and floating interest rates are allowed. For floating interest rate, they the reset period is 6 months, meaning to say they change every 6 months. Interest is based on something called reference rate, which is usually decided by the international benchmarks like overnight alternative reference rate or swap rate from Financial Benchmark India Limited. So this FBIL is Financial Benchmark India Limited. When we say interest rate limits, the ceiling. So for deposits less than 3 years, maximum 2.5% is permissible over the reference rate. So 1% equals to 100 basis point. 1% is equals to 100 BPS. So when we say 250 BPS, it is nothing but 2.5%. So for deposits less than 3 years, maximum permissible limit is 2.5% plus reference rate. And for deposits with a tenure of 3 to 5 years, the maximum which the bank can offer is 3.5 plus the reference rate. And for interest rate calculation, a year is counted as 360 days. Interest is calculated every 6 months. And for the remaining period, interest is calculated on actual number of days. For example, if a person does an FD in FCNR account for a tenure of 1 year and 3 months, so interest will be calculated for first 6 months, second 6 months, and for the remaining 3 months, interest is calculated on the actual number of days. So if January, February, March, so it is 31 plus 28 plus 31, and not like 30 into uh, 90. All right. For renewal of deposits, if you renew within 14 days after maturity, interest is paid for the overdue period at the lower rate, either rate on maturity or renewal date. And after 14 days, it is treated as a new deposit. If NRI withdraws before the minimum tenure of 1 year, after renewal, bank may take back the extra interest which bank has paid. In case of death of depositor, there can be 5 scenarios. Number 1, the amount is paid on maturity. In that case, full contracted interest is paid. Second, it is paid before maturity. In that scenario, interest for the actual period is provided and there will be no penalty. When death happens before maturity but the amount is paid after maturity, in that particular scenario, interest at contracted rate is provided till maturity, and after maturity, simple interest is provided. What if there is a death happens after maturity? So in that particular scenario, interest will be provided as per resident foreign currency savings rate till the payment is made. And if the resident is the nominee, then the amount is converted to INR and future interest as per regular domestic FD is provided. What happens if NRA returns to India permanently? In that scenario, the deposit can be continued till maturity at the original or the contracted interest rate, and from date of return, this account is treated as a resident deposit account or a resident foreign currency account. So on maturity, it can be converted into two types of account: resident rupee account or resident foreign currency account. An interest rate of new deposits will be provided as per the residential norms. Now, if FCNR account is converted to RFC account before maturity, interest will be given for period it has done at RFC savings bank rate, and even if the deposits was withdrawn before minimum 1 year period. So this is what we have discussed a while ago also, but it is important, that's why I am repeating it. Now, what happens with respect to premature withdrawals? So bank can deduct a penalty based on its internal policy. If foreign currency has been swapped, then bank can recover the swap cost. But for this, bank must inform the depositor about the penalty rules, and if bank fails to inform, then the bank must bear any exchange losses. No penalty will be levied if deposit is split into smaller parts, but the amount and time remains the same. If FCNR account is converted into RFC account, uh, similar to the NRE account, NRE when converted to RFC, there will be no penalty. So if FCNR is also converted into RFC, there will be no penalty. And if there is a transfer of banking business, if the bank branch business is transferred to another bank, then no penalty will follow. And all other rules they are same as NRE account. Let's move forward to our third type of account, NRO account. So an NRO account is a type of bank account in India that can be opened and maintained by any person who is living outside India. Now, this includes NRI and even foreign nationals of non-Indian origin who come to visit India. It is used to manage income earned in India like rent, pension, dividend, or any other legitimate Indian earnings. And it is denominated in Indian rupees, meaning to say it is maintained in Indian rupees. And who can open it? So, any person living outside India or any foreign national visiting India can open the NRO account. Where can you open this NRO account and what are the types of account? So you can open this account with the banks and post offices in India that are authorized to deal with non-resident accounts. And with respect to types, savings account can be opened, current account, term deposit, and recurring deposit can be opened. Uh, Joint account holdings are permissible. NRI can open a joint NRO account with a resident Indian, but again, it will be only on former or survivor basis. Or NRI can open a joint account with another NRI or PIO. Here, the minimum tenure for fixed deposit is 7 days only, unlike NRE account and FCNR account, where the fixed deposit tenure is minimum tenure is 1 year. The interest is paid as per RBI guidelines, and the saving interest is same as the regular Indian accounts. For fixed deposit rates, the interest can vary depending on the tenure and deposit size, but the rate cannot be higher than what's offered for similar domestic deposits. There will be no extra interest allowed for foreign citizens or bank staff, and interest is paid quarterly or more frequently. Now, what are the permissible credits and debits? So, with respect to credits, inward remittance from abroad is allowed. Income earned in India can be credited if there is any transfer from other NRO account, or gifts or loan in rupees from a resident relative which are within LRS limits. They are permissible credits in this NRO account. With respect to debits, now, this NRO account can be used to make payments within India, to transfer to other NRO accounts. Remittance abroad are generally not allowed except for the current income like rent, pension, interest, or up to USD 1 million per financial year by the NRIs or PIOs. Now, this can also be transferred to NRE account. So, only the current income, and the limit is USD 1 million per financial year. Loans against NRO accounts are permissible. So, banks can give loan in India using NRO deposits as security either to the account holder or a third party. But the loan cannot be used for relending, for agriculture or plantation business, or for real estate investments. And what happens if NRI returns to India? So, if the NRI comes back to India and decides to stay in India for an uncertain period, then the NRO account will be converted to a resident account. And if the resident becomes NRI, then the existing resident account will be changed to NRO account. Power of attorney: a resident person holding power of attorney can make local payments or can remit money to NRI as allowed under the rules. Issue of international credit cards. So banks can issue credit cards to NRIs or PIOs, and the payment on these cards can be settled from the inward remittance, NRE account, FCNR account, or from the NRO account. Income tax requirements. So when money is sent abroad from the NRO account, it should be of net of taxes, and the person has to submit required tax documents as per CBDT, Central Board of Direct Taxes. Bank accounts in India for foreign national visiting India. So foreign nationals who visit India, they are allowed to open bank accounts, but there are some rules based on who they are and how long they stay. So if a foreigner who is not of Indian origin comes to visit India, they can open NRO account. but this account has to follow certain conditions. Number one, the money in this account should come from abroad. Either they send through a proper banking channel or brought physical currency with them and convert it in Indian currency. And no Indian money can be deposited into this account. Only interest earned on the account can be credited locally. The account can be used for a short duration, up to 6 months. And when the foreigner leaves India, the money in this account can be taken back with the foreigner. And what happens when a foreign national leaves India after employment? So here they come for a tourist purpose. Here they come for a employment purpose. So suppose a foreigner was working in India and had a regular resident account. Now, after leaving the job in the country, their resident account is changed into an NRO account. And this is allowed so that the pending payments like any salary, rent or refund can be received into that account. The bank must ensure that these payments are bona fide, they should be genuine, and after paying all applicable taxes, the money can be sent abroad. Again, there is a capping of 1 million US dollar per financial year, and the money from this account can be used only and only for sending abroad, not for local payments. And once all dues are received and sent, the account must be closed. Individuals, entities from specific countries. So for nationals of countries like Pakistan and Bangladesh, special rules apply. A Pakistani national or Pakistani owned entity, they require RBI's prior approval. With respect to Bangladesh nationals, they can open bank account if they have a valid visa and a residential permit issued by the immigration offices, so the FRO or FRRO. And if the entities are owned by Bangladesh citizens, then in that scenario, the RBI's approval is required. For minority communities from Pakistan and Bangladesh, which includes Hindus, Sikh, Buddhist, Jain, Parsi, and Christian. So, if they have a long-term visa from the Indian government, banks can allow them to open one NRO account. Keep that in mind. Only one NRO account is permitted, and this account can run for 6 months and can be renewed every 6 months if the LTV long term visa application is still under process. Once they become Indian citizen, this account can be converted into a normal resident account, and all such accounts must be reported quarterly to the Ministry of Home Affairs. Special non-resident rupee account, so short for SNRR. The SNRR account is a special type of rupee account open in India by a person living outside India but who has some business interest or transaction in India. Now anyone residing outside India can open this account provided they have valid business reasons connected with India. And keep a note that the companies or people from Pakistan, Bangladesh, they need special permission from the RBI. So why it is opened? So it is open for genuine business transaction in rupees. This can include investment in Indian rupees, importing or exporting goods, giving or receiving trade credit, borrowing or lending money under external commercial borrowings, or business dealings by IFSC, but outside IFSC itself. The tenure is maximum for 7 years, so the account can be held for as long as the business activity or the contract lasts, but for not more than 7 years. For extension beyond 7 years, RBI's approval is required. Business specific naming. So the account should be named after the business activity it is used for. For example, if the account is used for exports, it is called SNRR export transactions. And bank may allow one account per business type or a single account for multiple activities if transactions can be separated. Now we use this account to do business. For businesses, you already know what type of account is open. Is it savings or current? Yes, obviously, current account is allowed. And do we pay any interest on current account? No. So will we pay any interest on SNRR account? So the answer is no. We do not pay any interest on the balance which is in SNRR account. What type of transactions can be done? Only, keep that in mind, only those transactions should happen which are directly connected to the business, and the money in this account should match the nature and size of the business. The SNRR account cannot give foreign exchange to any Indian resident, and there is no transfer allowed for NRO account from NRO account to the SNRR account. The money in the account can be taken back abroad after payments of applicable taxes, and all business done through this account are subject to Indian taxes wherever applicable. The SNRR account will be converted into a resident account if the account holder becomes a resident. And with respect to nomination, if the account is in the name of individual, they can nominate someone to receive the funds in case of death. And in case of death, the balance can be credited into the nominee's NRO or NRE account, or can be remitted abroad through regular banking channels. Now let's talk about the remittance and property rules for NRIs and PIOs. So NRIs and PIOs are allowed to send money outside India from their Indian assets. This is allowed up to 1 million US dollar per financial year, but again certain rules have to be followed. Uh, what assets can this remittance be made from? So money in NRO account, sale proceeds of the property, or the property inherited, asset received through a deed of settlement. So deed of settlement is valid after death of the person who made the deed, and all remittance installments should go through one bank branch. And for money from NRO account, they must declare that the money is not from loans taken in India. Cases where RBI's approval is required. So prior permission of RBI is required where more than one US dollar, more than 1 million US dollar in a financial year is to be remitted. If the recipient is a foreign citizen and the money is from inheritance, if not remitting the money would cause hardship to someone, and if the asset is not covered under RBI's direction. So over and above 1 million US dollar, and if it is not remitted, then the hardship will cause if the recipient is a foreign citizen and the money is from inheritance, and if the asset is not covered under RBI's direction. Income tax. Uh, so before remitting, all applicable taxes must be paid in India. Keep that in mind. Acquisition and of immovable property by NRI. So NRI, PIO, and OCI, they can buy and receive property as gift, or they can purchase the property. They can buy from resident individuals, but uh, agriculture land, farmhouse, or plantation property cannot be bought or cannot be made as gift. Keep that in mind. With respect to joint property with foreign spouse, so a foreigner married to an NRI or OCI can jointly buy one property except for agriculture, farm, or plantation land, but the money must come from abroad or from NRE or NR account. No cash or traveler check is allowed. Marriage should be registered and at least 2 years old, and the foreign spouse must not be banned from such transactions. Acquisition by LTV holders. So minority community members like Hindu, Sikh, Jain, Buddhist, Parsi, or Christian from Afghanistan, Pakistan, or Bangladesh living in India on long term visa, they can buy one property for residential purposes and one property for uh, business purposes. They cannot buy property in the restricted area or near the military area. They must declare the source of fund to the local authority, from where they are getting the money to buy the property. The property papers must clearly state their nationality and long-term visa status, and they can sell property only after becoming Indian citizens. And if not, they need approval from DCP, FRO or FRRO office, and the property must be taken over if they are involved in any anti-Indian activities. Transfer of immovable property by NRI. So NRI can transfer property in India to residents, but payment must be made via banking channels, and if any transfer is not covered under RBI rules, prior approval of RBI is required. Repatriation of sale proceeds. Repatriation means sending money back abroad after selling property in India. When is RBI approval required? So if the property was acquired under FEMA or inherited, FEMA section 6 subsection 5 to be particular, or inherited, then RBI's permission is required. AD can, authorized dealers can, bank can allow repatriation if the property was bought using foreign money or NRE FCNR account balances. If bought using home loan, repayment should have been made from foreign funds or from NRE or FCNR account, and a maximum of 2 residential properties are allowed for repatriation. If in case of default loan, that is if an Indian resident took a loan from overseas lender and defaulted, the bank can sell the mortgage property and send the money to the foreign lender. There are certain restrictions on certain nationalities. The people from certain countries need RBI permission to buy or sell property in India, except for leasing for up to 5 years. So the citizens belonging to the countries like Pakistan, Bangladesh, China, Iran, Nepal, Sri Lanka, Afghanistan, North Korea, Macau, and Hong Kong. So they require prior RBI permission to buy or sell property in India. There is one exception, that this rule does not apply to OCIs from these countries. Creation of charge on immovable property. Sometimes an NRI or OCI who owns a property in India and is also a director in a company outside India, they may need a loan from a foreign bank. In such cases, an authorized dealer bank in India, which act as representative of that foreign lender, can create a mortgage on the NRI's property in India. But two conditions are to be followed. Number one, the loan must be used only for the business purpose of that foreign company and not for personal use. And if the loan is not repaid, the property is sold. The AD bank must sell it to an eligible buyer in India and send the sale proceed to the overseas lender. Repatriation of income and sale proceeds of asset held abroad by NRIs. So, when NRI return to India for good, they become resident in India, and now they have two options. They can bring their foreign assets to India, or they can keep those assets abroad as per FEMA rules. And they are allowed to hold, transfer, invest their foreign assets if they had acquired or held them while living abroad, or they inherited them from someone who lived abroad. As for example, if Anita worked in Canada and bought a house there, she can still keep it after returning to India. And this includes foreign bank account maintained while living abroad, income earned abroad like salary from a job outside India, business profit earned abroad, investments made while living abroad, gift or inheritance received abroad, and any income earned from foreign assets like interest or rent. So even after returning to India, they can use the foreign income or asset sale proceeds for any purpose abroad. Uh, they can make new investments abroad, and for this, they will not require RBI's approval, provided they use only their eligible foreign assets and they do not violate FEMA rules. Investments by NRIs or PIOs in India. So, NRIs, PIOs, and OCIs, they are allowed to invest in India, but again, certain rules and exceptions are there. they can invest either by FDI or FPI, foreign portfolio or foreign direct investments. So what is a foreign investment? So if a resident Indian invest on behalf of someone living outside India and declares their beneficial interest, then it will still be treated as a foreign investment. So beneficial owners are also the beneficial owners is a person. If the beneficial owner is a person resident outside India, then that investment will be treated as foreign investment. What are the prohibited sectors? So some business areas are completely prohibited from foreign investors, including NRIs or OCI. These include lottery business, gambling or betting, chit funds, but chit funds are allowed only on non-repatriation basis. Nidhi companies, TDR trading, transferable development right trading, real estate business, farmhouse construction, tobacco products manufacturing like cigarettes or cigars, atomic energy, railway operations, foreign technology tie-ups are also not allowed in lottery and gambling related sectors. So when can NRI or OCI invest? What are the permissible activities? So there are several permitted routes for investment in India. It can be a capital investment or a current amount investment. So with respect to capital investments, shares of Indian companies, units of LLPs or contributions in partnerships on non-repatriation basis, listed shares through foreign portfolio investments are allowed. Uh, Other securities are also allowed, like NRIs can invest in LLPs, alternative investment funds, venture capital, foreign venture capital investments. Investors can invest too. NRIs can also invest through investment vehicles like AIFs, and then there are depository receipts. So Indian shares can be given to a foreign depository for issuing depository receipts, and for foreign depository receipts abroad, and foreign companies can issue Indian depository receipts in India. So how can NRIs and FCIs uh, buy shares or other investments? So they can invest in three ways, mainly by subscribing to new shares, or uh, by buying shares in the secondary market, or by conversion of dues, meaning to say by receiving shares in place of money owned to them by the Indian company, if allowed and without RBI or government permission. What are the payment sources? How do they pay for the shares? So they can send money from abroad through banks. They can use funds in NRE or FCNR or escrow accounts. They can adjust it against money the company owes them, or swapping shares with other shares in sectors where automatic route is allowed. Sale proceeds after tax can be sent abroad or deposited into NRE or FCNR account. Buying or selling listed shares on stock exchange on repatriation basis. So NRIs and OCIs through a special NREPIS account can do this via authorized bank branch. There are investment limits. So one NRI or OCI can invest up to 5% of the total equity or each series of preference shares or debentures, and NRIs or OCIs together can invest up to 10%, which can go up to 24% with company's approval. Now, what is this NRI PIS account? So, it is a dedicated NRE account used only for buying and selling shares on repatriation basis. What money can go into this PIS account? So, remittance from abroad, transfer from other NRE or FCNR accounts, sale proceeds from earlier investments, dividend or income from investments, and this account can be used for the payment with respect to buying shares, sending money or dividends abroad, paying brokerage or charges, or to transfer to other NRE or FCNR account. So NRI and OCIs of firms trust they can also buy capital instruments on non-repatriation basis. So it is allowed in the shares of listed or unlisted companies, units of investment funds, capital in LLPs where there is no limit, and convertible notes or startups. Now, when we say non-repatriation basis, these investments are treated as domestic investments, and the money cannot be sent to abroad. Again, there are certain restrictions. So, it is not permissible to invest in nidhi companies, companies doing agriculture, plantation activities, real estate business, farmers construction, or transfer of development rights. How do the NRIs or OCIs pays for investment? They can send money from abroad, or they can use funds from NRE or FCNR or NRO account. Sale proceeds, so sale or maturity proceeds must go to NRO account. They are credited to NRO account, and they cannot be sent on they cannot be sent abroad because it is on non-repatriation basis. Investing in a partnership or proprietorship. So NRIs and OCIs can invest but only on non-repatriation basis, and they cannot invest in agriculture, plantation business, print media or real estate business, and the money should come from abroad or from their NRE or FCNR or NRO account, and the profits or capital they cannot send it to abroad and must be credited only in NRO account. Securities other than capitals instrument. So NRIs or OCI can buy government bonds, T-bills, mutual fund, ETF, PSU bonds, IDF unit, listed preference shares, debentures, regulatory capital debts from banks or national pension system if they are eligible, and they can use these securities as collateral for derivative trading on Indian stock exchange. How do they make this investment? By remitting money from abroad or using their NRE or FCNR account. And when it is on repatriation basis, they can send their money abroad or keep it in NRE or FCNR account, and it also includes NRO account. They can also buy securities other than shares on non-repatriation basis, and when it is done on non-repatriation basis, the money cannot be sent abroad, and the credit happens in NRO account. LLP investments. So NRIs or OCIs can invest in LLPs under automatic route. Any resident company outside India can invest except for Pakistan or Bangladesh. So there must not be any performance link conditions to invest in LLPs, and the proceeds can be sent abroad or credited to NRE or FCNR account. Convertible notes. So NRI and OCI can sell or gift convertible notes bought on repatriation basis to another person abroad, but caution has to be maintained. If the sector needs government approval, then prior approval is required, and if buying from stock exchange breaches that NRI or OCI limit, the extra portion must be sold within 5 working days to an Indian resident. Transfer of capital instruments. So NRIs and OCIs uh, may transfer to a person outside India as per foreign investment rules to another NRI or OCI on non-repatriation basis, or as a gift to another on non-repatriation basis. Sell on stock exchange. So any foreign investor can sell shares on an Indian stock exchange as per the rules, except when those shares are held on non-repatriation basis. Securities held on non-repatriation basis can also be gifted to a non-resident, but prior RBI approval is required. So let's check your progress now. Funds in Dash cannot be freely repatriated outside India. So NRE account freely repatriated, yes. NRO account freely repatriated. FCNRB account freely repatriated. SNR account no. So the correct answer for this question is SNRR account. Facilities for acquisition of property for long-term visa holder is available to a citizen of Bhutan, Myanmar, Afghanistan or Nepal. And for this particular question, two answers are correct. Number one, Myanmar, and number two, Afghanistan. So facility for acquisition of property for long-term visa holder is available to a citizen of Myanmar as well as Afghanistan. Citizens of Dash cannot transfer immovable property in India without prior permission of the RBI. So Hong Kong is correct. Iran is also correct. Again, two answers are correct for this question. Investment by person resident outside India is not prohibited in. It is not prohibited in retail trade. It is prohibited in railways, cigarette and nidhi. So it is prohibited, but it is not prohibited in the retail trades. So let's move on to our practice questions. Number one, which of the following statement regarding the NRE account or scheme is correct? So a resident power of attorney holder can transfer funds from an NRE account to another NRE account if both account holders are NRI. So a resident power of attorney holder cannot transfer the money. So this statement is not correct. Refund of application money for property purchase can be credited back to NRE account provided the original payment was made from a resident account. So the mode of payment should be the NRE account or foreign remittances, not a resident account. So this statement is also incorrect. Interest earned on an NRE account is taxable. No, it is not taxable. Hence, this statement is incorrect. We are not required to even read further. Foreign currency tendered by the NRE account holder during a temporary visit to India can be credited to NRE account provided it was declared on a currency declaration form. So this statement is correct. Joint accounts can be opened between NRI and a resident relative on a former or survivor basis, but the resident relative can only operate it as POA holder. So this statement is also correct. So the correct answer for this question is option C, 4 and 5. Which of the following statements about NRE account are correct? The interest rate on NRE term deposit can vary based on tenure and bulk deposit classification, but cannot exceed the rate for comparable domestic term deposits. So this statement is correct. Premature withdrawal penalties apply in all cases including conversion to RFC accounts. So RFC accounts are exempted, hence this statement is not correct. Interest on NRE savings bank account is deposited only at half yearly intervals. So it is actually credited at quarterly intervals or at a lesser frequency, not half yearly. So this statement is incorrect. Loans can be granted in India against NRE deposits, but premature withdrawal of such deposit is strictly prohibited. So this statement is correct. Upon death of NRE account holder, the balance can be transferred to a non-resident nominee without RBI approval. So upon the death of NRE account holder, the balance can be transferred to non-resident nominee. So this statement is actually correct. Additional interest rate for senior citizens are allowed. So no, this is not allowed. So 1, 4 and 5 are correct. A is the correct answer for this question. Rohan, an NRI working in Canada, has an NRE fixed deposit in India. He wants to take a loan against his NRE deposit for various purposes. He approaches his bank with the following request: a personal loan for home renovation in India. This request can be accepted. A loan to invest in an Indian company on non-repatriation basis. Yes, this can be accepted. A loan to purchase agriculture and land for farming. No. A request for the loan amount to be repatriated outside India. Again, no. So only 1 and 2 can be approved. So B is the correct answer for this question. Consider the following statements regarding FCNR B scheme. So FCNR deposit can be maintained in any foreign currency, including non-convertible. So no, it should be convertible currency. So this statement is not correct. The interest on FCNR deposit is calculated based on 365. No, it is actually 360, not 365. Floating rate deposit must have a reset period of 6 months and the reference rate is linked to overnight alternative reference rate or swap rates published. So this is correct. The maximum permissible tenure is 7 years. No, it is 5 years. If FCNR deposit matures and NRI has returned, it must be converted into a resident rupee or RFC account if applicable. So this statement is correct. In case of death of the sole depositor before maturity, if the deposit is paid after the maturity date, the interest is payable at the contracted rate till maturity and at the savings bank rate under RFC scheme thereafter. This statement is correct. Banks are mandatorily required to charge a penalty for premature withdrawal even if deposit is being converted into RFC account. This statement is not correct. So, which of the following statement are incorrect? 1 is incorrect, 2 is incorrect, 4 is incorrect, and 7 is incorrect. 1 to 4 and 7, option A. So, option A is the correct answer for this question. Consider the following statements regarding the non-resident ordinary account scheme. Identify which of the following statements are correct. So, a foreign national of non-Indian origin visiting India can open an NRO account but cannot maintain it after leaving India. It can be maintained even after leaving India. So, this statement is not correct. Uh, Joint NRO accounts can be maintained between an NRI and a resident, but only on former survival basis. So, this statement is correct. Loans against NRO deposits can be used for personal purpose, business investment, and purchase of agricultural land. So, purchase of agricultural land makes this statement incorrect. Remittance from an NRO account to an NRE account is strictly prohibited regardless of the amount or purpose. So, while it is restricted, it is permissible under certain conditions. So, saying that it is strictly prohibited is not correct. Hence, the statement is incorrect. A resident power of attorney holder can operate an NRO account, including withdrawal funds for local payments, and making remittance to the NRI account holder. This statement is correct. So, statement 2 and 5 are correct, making option C as the correct answer for this question. Consider the following statements regarding the banking regulations for foreign nationals in India. Identify which of them are not correct. Foreign nationals of non-Indian origin visiting India can open both NRO and NRE account for local transactions. They can open NRO but not NRE. Hence, this statement is not correct. The balance in the NRO account of the foreign national must be repatriated within 3 months of leaving. It is up to 6 months, not 3. So, this statement is not correct. A foreign national living in India after employment can maintain a resident saving account indefinitely for pending due. So, no, this statement is not correct. The total amount that can be repatriated from a redesignated NRO account of a foreign national per financial year is capped at USD $1 million. So, this statement is also correct. This statement is correct. So, Bangladeshi nationals can open bank account in India only if they hold a valid visa and valid residential permit from NRO, from FRO or FRRO. So, this statement is actually correct. And citizens of Pakistan, Bangladesh belonging to minority communities can open multiple NRO. They can only open only one NRO account and not multiple NRO accounts. So, 1, 2, 3, and 6 are not correct, making statement A as the correct answer. Which of the following statements regarding SNRR account are correct? The tenure is limited to a maximum of 7 years except for specified activities. This is correct. Fund from an NRO account can be transferred to an SNRR account under FEMR guidelines. This statement is not correct. Fund from an NRO account uh, cannot be transferred to SNRR as they are prohibited. It is a prohibited transfer. So, this statement is not correct. The balance in in the SNRR account are fully repatriable after payment of applicable taxes. So yes, this statement is correct. So statement 1 and 3 are correct. This is the correct answer. Consider the following statement regarding the remittance of asset by NRIs or PIOs. An NRI PIO can remit sale proceeds or inherit assets up to 1 million in a financial year without RBI approval, provided the property was held for minimum 5 years. So there is no minimum requirement, making this statement incorrect. Uh, any remittance of asset beyond 1 million requires prior RBI approval, except when the remittance is for medical emergencies. Even for medical emergencies, if the amount is for more than 1 million, then RBI permission is also required. So this statement is not correct. When an asset is, if an NRI inherits an asset through a deed of settlement from a relative, the remittance can be made only after the settler's death. So this is correct. When the asset is received, is inherited after the settlement, the remittance can be made only after the settler's death. So this statement is correct. Before allowing any remittance from an NRO account, the authorized dealer must obtain an undertaking from the remitter confirming that the funds are not sourced from borrowings in India. So this statement is also correct. So statement 3 and 4 are correct, making C as the correct answer. Rahul, an NRI working in the US, wants to buy a residential apartment in Mumbai. He also planned to jointly purchase another apartment with his wife Emily, who is a foreign national and not an OCI. They have been married for 1 year and their marriage is legally registered. Rahul intends to fund these purchases using his NRE account in India. Based on the above scenario, which of the following statement is correct? So here the marriage is only 1 year old. Uh, for jointly purchase the property, the marriage should be at least 2 years old and not 1 year old. So will they be able to purchase property together? No. Rahul can buy the residential apartment individually, but he cannot jointly acquire a property with Emily due to their marriage uh, duration. So this statement is actually correct. Rahul and Emily can jointly purchase the apartment, but the payment must be made only through Emily foreign bank account. So no, this statement is not correct. They cannot jointly buy. Rahul can buy both properties, but Emily must apply for an OCI card holder. No, this is also not correct. Emily can jointly purchase the apartment with Rahul, provided they submit an affidavit confirming their intent to stay married for at least 7 years. So no, this statement is also not correct. So A is the correct answer for this question. Okay, let's get back to check your progress now. So yes, so here funds in SNRR account can also be freely repatriated outside India. Sorry for this confusion. So funds in NRO account cannot be freely repatriated. NRE account it is repatriated. FCNRR account it is repatriated. SNRR account it is repatriated. In NRO account it is not freely repatriated. So NRO account should be the correct answer for this question and not SNRR account. Sorry again for this blunder. This is not a confusion. This is a blunder. Now let's get back to the practice questions. So this is NRO account guys and not SNRR account. So we were done with question number 9. Let's move on to question number 10. Which of the following statements regarding the acquisition, transfer and repatriation of immovable property in India by non-resident is or are correct? A long-term visa holder from Pakistan, Bangladesh or Afghanistan who belongs to a minority community can acquire multiple residential units. So no, only one, not multiple. Incorrect. A non-resident acquiring or transferring immovable property in India must ensure that the transaction is conducted through banking channels within India, and prior RBI approval is always required for such transactions. So this statement is incorrect. While transaction must be through a banking channels, prior RBI approval is not always required. So this statement is incorrect. Repatriation of sale proceeds of immovable property by an NRI PIO is subject to condition including that the property must have been acquired as per foreign exchange laws and paid foreign exchange or from NRE or FCNR account. So this statement is correct. Any citizen of China, Iran or Nepal can acquire transfer immovable property in India freely without requiring RBI permission provided they are not OCI. So this statement is not correct. This is an incorrect statement. An overseas lender or security trustee holding a charge on an immovable property from an external commercial borrowing availed by a resident in India can sell the property to a resident Indian and repatriate the proceeds towards outstanding dues in case of loan default. So this statement is correct. So which of the following statement are correct? It is asking for the correct statement. Statement 3 and statement 5 are correct. Option A is the correct answer for this question. An authorized dealer in India can create a mortgage on an immovable property owned by which of the following individuals for an overseas loan? An NRI OCI who is a director of a foreign company availing loan outside India. So B is the correct answer for this question. Consider the following statement regarding the repatriation of income and sale proceeds of assets held abroad by NRIs. So, a resident in India can hold foreign securities only if they were acquired through inheritance from a person who was resident outside India. So, this statement is not correct. A resident in India can hold foreign securities not only if they are acquired through inheritance, but also they can acquire while residing outside India. Hence, this statement is not correct. Income earned from employment or business outside India while being an NRI can be retained abroad even after returning to India without RBI approval. This statement is correct. A resident in India can freely invest the sale proceeds of their foreign assets into new investments abroad regardless of source of fund. So this statement is not correct. It must not violate the FEMA rules. So not correct. 1 and 3 not correct. D is the correct answer for this question. Consider the following statement regarding investment by NRI PIOs in India. A resident Indian investing in an Indian company is always considered a domestic investment, irrespective of any beneficial ownership declaration. So this statement is not correct. If resident Indian declares that the beneficial interest is held by non-resident, then it will be treated as foreign investment and not domestic investment. So this statement is not correct. NRIs or PIOs can invest in Nidhi companies under the automatic route. So Nidhi companies is a prohibited sector to invest in. So this is incorrect. Investment by NROs in chit fund is completely prohibited even on non-repatriation basis. It is actually allowed on non-repatriation basis and it is not completely prohibited. So this statement is also not correct. NRIs, PIOs are allowed to invest in capital instruments of an Indian company through both FPI and FDI. So this statement is correct. Real estate business investment by NRIs or PIOs are permitted except for construction of farmhouse. So real estate business is not permitted. So this statement is not correct. Foreign technology collaboration for gambling lottery business is prohibited in India. This is correct. So 4 and 6 are correct. So making option C is the correct answer for this question. Which of the following statements regarding the purchase or sale of capital instruments by NRI or OCI on a repatriation basis are correct? An NRI or OCI can purchase or sell capital instrument of a listed company only through a designated AD branch. This statement is correct. The maximum holding for an individual NRI or OCI in a listed company is 10%. It is actually 5 and not 10. So this is not correct. The aggregate ceiling for all NRIs or OCIs in listed Indian companies can be raised from 10% to 24%. So this is correct if a special resolution is passed. Sale proceeds of capital instrument on repatriation basis can only be invested in capital instruments and not remitted outside India. So it is on repatriation basis. So it can be remitted outside India. Hence this statement is not correct. An NRE PIS account is required for NRI OCIs investing through the scheme, and permitted credit includes inward remittance and income earned from investment. So this statement is actually correct. So 1, 3 and 5 are correct, making option A as the correct answer. Consider the following statement regarding the purchase and sale of securities by NRIs or OCI. NRI OCI can invest in listed non-convertible debentures on both repatriation and non-repatriation basis. This statement is correct. Sale proceeds from securities purchased on repatriation basis can be credited to an NRO account. So yes, it can be credited to an NRO account. There is no harm in it. So it can be credited to NRE account, FCNR account, or NRO account. Chit fund investments are allowed for NRIs or OCIs only on repatriation basis. It is allowed only on non-repatriation basis and not repatriation basis. So this statement is not correct. Which are correct? 1 and 2 are correct. So only 1 and 2, B is the correct answer. Thank you for watching this session. I hope each and everything is clear to you. But again, if you have any doubts, please don't hesitate to ask us on our Telegram group channel JIB CIB Prep. Uh, let's meet in next class with unit number 10. Till then, please take care and do revise.